Ladies and gentlemen, welcome back to the channel. Here in this video, we are going to be going over everything you need to know as far as data for AMC stock. But I think the biggest thing that most people want to know is, when is AMC stock going to actually start trading better? There's a very specific date you need to be watching for. I will share that with you here in this video as well, and my expectations. Also, you have to consider the economy, and that will be important. The trajectory of the economy will mean everything for this market. Hit the like button, subscribe to the channel, and let me know what you think about this information down below in the comments section. So first and foremost, let's briefly go over the markets today and AMC stock. I think it's pretty clear. Interest rate sensitive names getting slapped in the face today. Okay, big tech is dominating. Nvidia is up 3% today. ARM even is up today. You have a lot of your big tech stocks that are doing well today. Okay, and the Nasdaq is up 0.35 as a consequence to that. The Russell down almost 1%, which, you know, the Fed raised their estimates for rate cuts, lowered their estimates for rate cuts, pricing in not as many rate cuts in 2025, 2026, and the longer run rate being higher, the neutral rate being higher. I'm not convinced of that. I'm not convinced that the Fed is not going to be cutting a lot in 2025. Here's why. Powell on the conference itself sounded very, not alarmed, I guess is not the word, but almost like he's waiting for something to break. Like he thinks a sudden weakness is coming in the economy. And he said that over and over again, that, you know, there could be this sudden weakness that could cause the Fed to cut rates more than, you know, or sooner or more than they expect. And when you go out and talk to people, that's what you're hearing, is people are not doing that great. Look at Lululemon saying consumers are sharply pulling back to start 2024. McDonald's consumers are pulling back their purchases at McDonald's. You're seeing this company after company after company, but it's still not like represented in the data that we get so far. The retail sales, the durable goods, things have started to get a little bit worse, but it almost sounded like Powell knows something that we don't. And if there is anyone that would know something that we don't, it would be Powell. Okay, it would definitely be young Powell. So that's kind of the vibe, if you will, that I got from Powell in the meeting. Now, what does that mean? Well, okay, full-blown recession, not good. The Fed is going to flip-flop and start cutting rates as soon as they get the first sign of weakness. It looks like Powell wants, any reason to really start cutting rates at this point. Like any reason at all. You give Powell a reason to start cutting rates, he is going to go cut crazy on the markets. And that's going to be great for interest rate sensitive names, as long as the pain in the economy is not deep. Right? As long as it's not like some kind of bad recession event coming, then that would be a problem. And let's be honest, that's not really something that is on my radar. If we did get a slowdown, I don't think it's going to be that deep. Definitely not like a great financial crisis or anything along those lines. So that begs the question, when do interest rate sensitive stocks start to do better? Well, I think you can directly look at when we're going to get the first Fed rate cut, and determine around this time you could start to see AMC performing a lot better. Now, in the next Fed meeting, there's a 14.4% chance of a cut. This could change to, pricing in a cut by May. It really just depends how April data comes out and the rest of March. We do have PCE coming out next week on Friday, personal spending coming out next week, as well as durable goods next Tuesday. So there is quite a few different data points that we will be getting in regards to the economy, in regards to the consumer. And I think that will be very important for, whether or not we ultimately get a cut in May or a cut in June. I don't think the Fed would hesitate at this point to cut in May. Again, it looks like to me Powell is just looking for an excuse to start cutting rates. I think he's starting to feel, let's be honest, a lot of the political pressure behind rates being this high, especially during an election year. They're really a lot of the senators and a lot of your other people in government are basically telling Powell to start cutting rates. And that can have a very influential impact on Powell, because the last thing you want is Powell to be wrong on the rise in inflation. The whole transitory argument was wrong. And then the last thing Powell wants is to be too late to cut rates and people start losing their jobs. I think the Fed would want higher inflation, not skyrocketing inflation, but just higher trend inflation and people in their jobs. I think if you were to give Powell a choice at this time, Powell would say we would rather have higher inflation and no recession, because it is going to be so political if you start to go into a recession. So I think by May, we actually could get a cut if the data starts to look bad in the economy. By June, that's when the markets are firmly pricing in the first cut. 65.7% chance of a cut. That is on June 12th. As you start summer, you should be getting that first rate cut. Now, do interest rate sensitive stocks really start to outperform when you get the first cut? Probably. Wouldn't surprise me if that's not the case. But I think you start to get an outperformance or generalized bottoming and upwards trajectory in small cap stocks when you do get that first cut in June. Now, is it going to be the time where, AMC rockets to the moon or other stocks just rocket straight upwards? Maybe not. Maybe that does take a little bit more time. But nonetheless, I do think that is really when you can start to see the outperformance of AMC. So that's kind of the specifics of when to expect AMC to start outperforming or start doing better. Now, I did stumble across this article for AMC that I would like to share with you guys as well. It says AMC stock, why Q1 may be better than expected. And as always, if you get AMC that's giving us better numbers or good news or whatnot, you can always see, AMC start to do, better. But it's not something you should count on. Apparently, according to the street, Q1 may be better than expected. The Wall Street consensus projects AMC will report a 12% decrease in revenues for Q1 2024. But here's why that might not be the case. It says, despite Q1 figures compared to 2023, recent box office successes like Kung Fu Panda 4 and Dune Part 2 hint at a potential revenue surprise. CEO Adam Aron cautionary approach to the impact of the writer's strike may lead to a revenue performance closer to the higher end of AMC's guidance. It says, after a tough post-COVID recovery, AMC has been gradually improving its weakened fundamentals. However, so far in 2024, shares of AMC had significantly declined due to concerns about stock dilution and the expected revenue impact of last year's Hollywood writers' strike. The strike is expected to dramatically affect domestic box office figures to the entire cinema industry in 2024. In response to these concerns, Wall Street has lowered its expectations for AMC's Q1 revenue. All 6 analysts currently covering the stock have slashed their estimates. Currently, the consensus is expecting AMC to report first quarter revenue of $839.6 million, marking a 12% year-over-year decrease. It says domestic box office results significantly influence AMC share performance. The figures for the first quarter of 2024 appear weaker compared to those of Q1 2023. Last year, from January to March, the box office recorded $1.722 billion in revenues from 187 releases. The highlight was Avatar: The Way of Water, which accounted for approximately 16% of the total box office. This year, as of March 21st, the Q1 box office has grossed $1.305 billion with 175 releases. While there is still time for this figure to rise by the end of the month, it seems unlikely that the quarter will match the robust figures of the same period last year. However, despite concerns, there have been some positive surprises, particularly with more robust releases towards the end of Q1. The first notable success was Kung Fu Panda 4, which premiered on March 8th. The movie maintained its top position at the box office 2 consecutive weeks, generating an estimated $30 million in revenue. With a total gross of 112.85 million so far, it is expected to accrue even higher revenue by the end of the month. The second pleasant surprise came from the exceptional performance of Dune Part 2, which debuted on March 1st and claimed the top spot in the Q1 box office gross. Distributed by Legendary Entertainment, the sci-fi epic has amassed global box office sales of 494.7 million, a commendable achievement. Although this final sprint in the domestic box office gross for Q1 2024 may not be sufficient to surpass the results of Q1 2023, the film industry will commence Q2 on a much more solid footing that has started Q1. And then he says, why might Q1 exceed projections? It says, during the last 2 quarters, AMC CEO Adam Aron consistently cautioned shareholders about the potential impact of the Hollywood writers' strike on film releases. Consequently, hopes for a rebound in AMC's revenue to pre-pandemic levels have been put on hold. The cautionary stance has contributed to a roughly 30% decline in the company's share price this year, as analysts have adjusted their projections downward for the coming quarters. Despite the likelihood of weaker Q1 2024 revenues compared to Q1 2023, I anticipate that AMC will report numbers closer to the higher end of its guidance, around 930.4 million, rather than the lower end of 745.6 million, given the March uptick in box office performance. More importantly, if AMC surpasses analyst revenue projections, analysts currently anticipate a 6% year-on-year decrease. It could alleviate the immediate pressure on the company's management to raise capital through methods that involve diluting shareholders. This, in my opinion, is the primary factor negatively affecting AMC's share price in recent months. So basically, if AMC does actually beat on earnings, maybe that means less dilution. Sure, yeah, but I think Adam Aron and AMC, they're not diluting shareholders to run their day-to-day operations. I don't think that's the situation that we're faced with here. I think they're diluting shareholders because they know they have a huge debt wall coming due in 2026, and they got to raise capital to fund that. If they don't, they're going to go bankrupt. That's just the bottom line to it. Now, if we get more rate cuts, that's going to be especially positive for AMC to help them kind of avert that coming crisis coming in 2026. But, that's up in the air. And when you do start to get some rate cuts, that likely starts to very positively affect AMC stock. So I thought that was an interesting article that I would briefly share with you guys and kind of give my opinion there. Again, yeah, sure, is AMC beating the numbers? Great. AMC usually beats the numbers. Does that have a huge outsized impact on AMC stock? Usually not. When you start to get some rate cuts, though, that is when AMC stock is going to start performing a lot better, in my personal opinion. Now, you do have short interest percentage of free flow at 14.25%, $157 million currently in short positions. Days to cover 2.6, 37.37 million shares that are currently sold short. Shares out on loan 53.69 million. Cost to borrow 1.12. Utilization of 69.31% and a short score of 69.8 out of 100. You do have cost of borrow fees at about 5% as well. So the data getting a little bit better. Short interest has been exploding recently. And does that lead into more people buying AMC stock? I don't have the answer right now, but it can't be a negative thing, right? Like, how would that be a negative thing? I don't think so. Now, taking a look at the option activity, you have seen 4 orders totaling $68.95 thousand with a positive order value of 26%. So nothing spectacular here today, but definitely could be worse, right? Now, as far as stock twits, sentiment today is a little bit lower than yesterday. No surprise. AMC is down 2.38%. You're down to 51 today, which is neutral. Yesterday, you were at 54, which was neutral. Message volume today is at 59, which is still categorized as high, but not as high as it was yesterday. And the participation ratio is at 54, which is considered normal, but still, it's not it's not that great. It's nothing. It's not knock your socks off. Wow, that's impressive. But it's definitely not terrible either. That's for sure. Now, stock tracker data, as I showed in the last video, nothing's really changed here. You got about 3,600 calls currently in the money for next week. 43,000 calls out the money for next week. 4,300 puts in the money, and about 20,000 puts that are out of the money as well. I think if you're really a bull in AMC, you're just waiting for one of two things to happen. You're waiting for the stock to continue to fall from here. I think right now where we are right here at about $4 per share is a critical level. If you fall under $4 per share, things get really ugly. And AMC stock is at $4.10 per share right now. If you get above that 50-day moving average at about $4.36 per share, that's where things get a whole lot better for AMC. Then you could potentially gap up all the way to about, $5.80 or so. And, that would be fantastic as well, guys. So let me know what you think about this information down below in the comment section. AMC's RSI at 39.78, which is definitely still on the negative side. Hit the like button, subscribe to the channel. Thank you for watching. Enjoy the rest of your day and your weekends, and I will see you in the next one.